Carrying thousands of dollars in bank debt feels like dragging a physical weight. But banks are motivated to clear non-performing assets off their books, creating an opportunity to resolve debt accounts for a fraction of what you owe. The mechanism for this is a lump sum settlement. You offer a single cash payment, and the bank agrees to write off the rest of the balance. The standard industry savings for these agreements typically lands between 40 to 60% of the original debt. Before you can negotiate, you need to meet two specific prerequisites. First, the account must be delinquent, usually 120 days or more past due. Second, you must have your lump sum cash reserve saved and ready to transfer. By organizing your cash and timing your approach, you provide the bank with the immediate liquidity they prefer over a non-performing uncollectible debt. Step 1 is validating the legal standing of the debt. Request a validation notice to confirm the bank still owns the account, and check your state statute of limitations to ensure they have the legal right to collect. Warning tone: while you build your cash reserve, do not make small micropayments. Sending a partial payment restarts the legal collection clock and resets the timeline for the bank's ability to sue you. This chart shows a standard baseline of a $10,000 debt. As the bar fills to 40%, you hit your $4,000 accumulation target. This is the exact minimum cash threshold you need on hand to make a credible initial lump sum offer. Once the cash is ready, you need a hardship profile. This documents exactly why full repayment is mathematically impossible for you right now. Draft a formal hardship letter. Keep the tone strictly factual. Point directly to a specific trigger event, like a medical emergency or a job loss, and state your exact percentage drop in income. Presenting the bank with clear documentation shifts the discussion. It proves you have a documented inability to pay, forcing them to consider a settlement. Make your call at the end of the month or the end of a fiscal quarter. Collection agents are actively trying to hit internal performance quotas during these windows. Standard customer service representatives lack the authority to forgive principal balances. Ask immediately to be transferred to the hardship, financial relief, or recovery department. Open the negotiation by offering 25% of the total balance. Make it clear this is a one-time, immediate lump sum payment available today. The agent will counteroffer with a higher number. Acknowledge their position, refer back to your hardship, and hold firm to your absolute maximum budget. If they accept, remember this rule. Verbal agreements over the phone are worthless. Do not transfer a single dollar until the bank sends you the proposed terms in a physical or digital document. Review that document carefully. Look right next to your payment amount for the exact phrase, "settled in full." This document is a binding contract. It prevents the bank from attempting further collection and legally bars them from selling the remaining balance to a third-party debt buyer. Execute the payment using a cashier's check or a money order. Never give a debt collector direct, automatic withdrawal access to your primary checking account. After the settlement, you face one final hurdle. The IRS categorizes any forgiven debt over $600 as taxable income, and the bank will send you a 1099-C form reporting it. You can neutralize this tax liability by claiming the IRS insolvency exception, which requires filing Form 982. This equation illustrates the rule. Take your total liabilities, which is everything you owe, and subtract your total assets. If the result is a positive number, you are legally insolvent. That calculated insolvency amount slots directly into IRS Form 982. Filing this form successfully excludes the canceled debt from your gross income, ensuring you keep your savings instead of handing over to the IRS. Print and store your written settlement letter in a secure location. Keep this document permanently to protect against future accounting errors. Wait 30 to 45 days, then pull your official credit report. Verify that the specific account now shows a $0 balance and is explicitly marked settled. While your credit score will reflect the settlement for 7 years, removing the outstanding balance stops the cycle of late fees and interest, ending the immediate collection phase of your financial recovery.